Mortgage Madness Bailout Bullshit, Part 5 and last part. Here are some of the simple things that have been proposed and some have been enacted. Raising FDIC limits on deposits, raising deposit insurance, so that normal business accounts can be covered. A run on a bank is generally something that occurs for reasons that have no basis in reality. I mean, Washington Mutual, the run on that was deserved. But in general, when you have a run on a bank, it comes out of rumors, and the bank will go under if it's no good. But it shouldn't go under because people in a panic pull accounts out. So by raising deposit insurance, essentially you prevent a run, and that has been done and seems very constructive. Putting capital into banks, that is the government making an investment at a reasonable rate of return in institutions that are willing to submit themselves to thorough examination, and who are willing, if they are sound institutions and are willing to demonstrate this seems perfectly reasonable. I mean, having sound institutions and a reasonable rate of return to the taxpayer seems to me that it helps both the system and doesn't hurt the political process. There's going to be some changes to mark-to-market accounting. Trading shops like Lehman Brothers and Morgan is, not the bank, but their other operation, are trading shops. And so if you're selling bonds or derivatives and holding them for a day or so forth, then you should have to market to market. In managing my niece's account, her account is marked to market every second of the day. On the other hand, banks make loans, and as long as the loan is paying off, the request is that they shouldn't have to write off something because it belongs to a class of assets that is suspicious. And that's what banks have always done. Made loans, not purchased securities that are questionable. But if they made a loan, they shouldn't have to take a markdown on it if it's not delinquent. So I believe that's going to be done. The mortgage purchases by the Treasury, I can assure you, will be at prices that will be unjustifiable over time. What I hear, particularly the analyst at CIBC Oppenheimer, I can't remember her name, talks about the write-downs that are yet to come. It's very unlikely that these institutions, if they unload these mortgage-backed securities, will do anything with the money that's in the public interest. And second of all, it's unlikely that the public interest will be protected. They're not going to lowball these things, especially not with the clown who's at Treasury now. What the Fed is doing is flooding, is going to purchase commercial paper from companies that already have commercial paper out and can't roll them over. So it's a stopgap measure. I'm not sure it's the best thing to do, but it may be. They're flooding, they're creating as much money as they can to try to force people out of U.S. government bonds into, say, corporate bonds, high-grade corporate bonds, so that companies will be able, sound companies will be able to borrow. This is certainly not a benefit to savers who want something secure, but this is what the Fed is attempting to do, to force people into more risky assets. At the moment, lending institutions and mutual funds and so forth simply are sitting on cash. And the system, if people can't transact business, then you have unemployed people, you have unemployed equipment, you have unemployed railroads and so forth. The notion that this is somehow socialistic is actually ludicrous. The countries, the very prosperous countries today that have an element of socialism, Denmark, Sweden, Norway, are extremely prosperous. They have a public philosophy that that applies to their small populations. What the U.S. has is something where the government runs around wasting money, bailing out institutions that they could have forecast would be in trouble if they hadn't been ignoring it for the prior year and lying to the public about the progress of the economy. There's some very good economists. I mean, I rely on my intuition and my ability to process numbers to predict recessions. But these are things that some actual econometricians have been predicting along the same time. Really, this kind of intervention, this kind of cronyism, is really more like fascist Italy, where the important people are bailed out and they run the country for the common people, and who can then glory in the way the country operates. There is something constructive that could be done. One, business investment has not been robust in the last 5 years despite apparent prosperity. It's going to get worse. Consumption will be reduced because people are going to have to save, assuming that they're employed and that their incomes permit savings. So consumer goods and services are not going to prosper. They're going to decline. So what do we have left? Our export industries. The world is going into recession. And so the export industries, while they're among the best companies in our system, are not, they're not going to be prospering. So what that leaves is some investment in American infrastructure. This is something states and localities do, and they can't sell their bonds now. Or because their property values are shrinking, their tax base is shrinking. So this is an opportunity to take the unused resources that we've got in the country, and they're going to get bigger in the next year, and allocate them to important public expenditures, water projects, bridge repairs, a lot of things that we're capable of doing and that are in progress anyway. But if anybody says it takes too long to get these things online, then what you do is you ask them, then what the hell has the government been doing for the last year while they've been ignoring the economic reality? And so at this point, that seems to be a good hope for making the recession more shallow and using American resources for something productive. Don't worry about educational investment. America will never have a good educational system. And whatever politicians talk about, you can blow it off, because it's not in the cards for America to develop something on a large scale that we could call education. So that's the conclusion.